Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, I'm David Bourne, and this is my top stock pick of the week. It's Dick's Sporting Goods. Now, Dick's was founded in 1948 when the original owner, Dick Stack, was tasked with starting a fishing tackle business out of the Army surplus store at which he was working. And instead, he took a $300 loan from his grandmother and decided to open the store himself instead. And it was a big success. Now, today, Dick's runs 732 sporting goods stores, but the CEO is still Dick Stack's son, Ed. So you could, in a way, you could say it's one of the largest family businesses, and it really still is essentially a family business. It's also been one of the winners in the during the pandemic. So you may have heard that small businesses, Main Street is suffering, and big businesses are picking up the slack. That's obviously a regrettable situation. It's not necessarily what we want to see for the economy as a whole, but rest assured, Dick's is one of those big winners. So they have a favorable product mix for the things that people want to buy now. Exercise equipment, exercise apparel especially has been a profitable source for them, and even things like golf equipment and other outdoor goods. So there's exercise, weights, footwear, everything for the things that people actually are still able to do. Now, Dick's also has an interesting part in the product mix story because they took a political stance on guns after there were several mass shootings in the United States. So they stopped selling all ammunition for assault rifles and handguns, and they even went to the extreme step of destroying about $5 million worth of inventory of military-style rifles. They just weren't going to sell them anymore. So while that may have seemed like an extreme step, it turned out to actually be a shrewd business move as well, because what they found was that they could replace that floor space with much better selling items. The guns and ammunition were relatively low margin items, and in many cases they were in competition with places like Walmart. And so they could repurpose that space with much better selling and higher margin sporting goods. Now they're also going to have a new concept coming soon called Public Lands. Public Lands is a high-end camp and hike and bike type store. So less guns and ammo and fishing tackle, and more like the sporting goods for the Whole Foods crowd. Now, last earnings season was a blowout. Dick's reported on November 24th. They reported net earnings of $2.01 a share, which blew away the Zacks consensus estimate of 94 cents and was 180% or so higher than the previous year at 66 cents. So that extra $1.06 that over the estimates boosted the estimate for full year 2020 from $4.07 all the way to $5.85. Now, the stock was relatively flat during that period. And I believe this is probably because management didn't provide guidance. Analysts are really hungry for guidance right now, and most companies are saying, I just don't know what's going to happen, so I can't provide guidance. Well, I think this is an opportunity. The fact that Dick's had such an incredible quarter and can continue to operate not only well, but even better than normal in these circumstances, I think is guidance enough to know that they're going to do well in the future as well. They also pay a 2.25% dividend, so this is a yielding stock as well. Treasury bonds, 10-year Treasury bond is still well under 1%. So for all those reasons, Dick's is my top stock pick of the week.
Hey everybody, Dave Bartosiak here with my top stock pick of the week. It's one that has been in Surprise Trader for quite some time, and it has been quite a surprise, a pleasant surprise at that. It's Ternium, ticker TX. Steel producer. Let's go ahead and take a look at Zacks.com, and I'll show you what I'm seeing in this stock. First and foremost, Zacks rank #1 strong buy. But in addition to that, look at the style scores here. Value style score of A, growth style score of B, momentum of C, but it rounds out with a VGM composite score of A. Zacks ranked #1 strong buy with a VGM composite score of A. That's about as strong as it gets in terms of Zacks rankiness. Now, the industry, the steel producers, right now is in the top 47% of our Zacks industry rank. So in the top half, but nothing to write home about there. But here is the fun stuff. So the previous earnings report, again, I said before, we had this in Surprise Trader because it had a nice positive earnings ESP. They ended up delivering 165.22% upside surprise. We're going to look at the actual numbers here. So you can see where was that 165% of $1, right? Or was it of 1 cent? Or, it was a decent number. So don't just look at the percentage. It depends on what that percentage was off of. And here we see a 61-cent EPS, so it was off of a decent amount. Okay, so let's go ahead and scroll down here. I want to take a look at the revenue estimates or sales estimates. So current year, not looking so good, but look at next year. 17.94% revenue growth. That's solid. And again, we're getting a pass for the current year, but then next year on earnings, 170% growth. So they're looking for $4.46 with the current year just at $1.65. So that's why you're seeing a nice move in the stock. Okay. Let's look at these estimates. You've seen these revisions to the upside. Look at the most dramatic is right here. Current year and next year EPS estimates. So over the course of the last 60 days, you've got 2 analysts increasing for the current quarter, 1 for next quarter, 3 for the current year, 3 for next year, up from 57 cents to $1.65 for the current year, from 193 all the way up to 446 for next year. Those are huge estimate revisions to the upside, and a big reason why the stock has done so well. Last thing I want to look at here is a price consensus and EPS surprise chart. I think this is by far the single most important chart we have at Zacks. The black line represents the stock's price. These multicolored lines that you see throughout are earnings estimates. These correspond to this left y-axis. The green, earnings beats. The red, earnings miss. So here you can see, just historically, lots of beats, or at least meeting expectations for Ternium. One sort of black eye there, but there's a very small loss, so that's not too bad. But look at how price trends with earnings, and as those earnings came down, the stock came down dramatically. But all of a sudden, we're seeing this uptick in EPS, uptick in earnings expectations, and the stock is running along with it. So that's a very good sign. Earnings trends take a while to reverse, as you can see on this chart, which is good when you're a long-term investor because you want to stick with something that is trending in one direction. That's what we're seeing here on Ternium, ticker TX. That's why it's my top stock pick for the week. So that is my top stock pick for the week. You already heard from Dave Boron, but you get to hear much more from him as he is the head honcho of our Marijuana Innovators portfolio. We have a great promo for right now, Zacks.com/promo. Check it out, the Marijuana Innovators portfolio. They've got something great for you there. That's all I have for you here with Zacks.com. We'll see you next week.